You ever seen the knife scene from Crocodile Dundee?
And your wallet.
Nick, give him your wallet.
What for?
He's got a knife.
That's not a knife. That's a knife.
So what I want to show you is a lot of people on YouTube go ahead and make trading videos and so forth, and you might think that it's trading, but it's not really trading. I want to show you what real trading kind of looks like to some degree. It might open up your eyes and visions. Now, this is a paper account that I use for a lot of coaching and mentoring clients that I manage and work with. So if you're interested in that and working together, definitely check out the website. But what happens is when a lot of people go in on YouTube and show you like, hey, a trade, my Amazon successful trade, or my Netflix loss, or my Microsoft win, they'll show you like the one piece or the one trade, and you might see the live account. And that's fine. That's great. I think that's kind of a good starting point for a lot of people. But the problem is there's a lot of information that you're also absorbing subconsciously. When you absorb this information subconsciously, you're also thinking and understanding where doing one single trade is probably what you want to do. And that is a real bad way to go. Really, when you look at trading, you probably think that trading is kind of one position at one point in one time. Unfortunately, trading is much more dynamic. It's kind of like a living, breathing organism that you have to constantly manage and modify and work with. And it's kind of like a little human that you're growing. So this is what happens is when you're looking at most people's accounts, you'll see kind of like one position. Like, let's just say this one. You're looking at that one position, SPX, and that is it. Or it could be Amazon, it could be Microsoft, whatever it is. But that's not really trading. What real trading is when you start having in dynamic positions with, I've got iron condors in here, like iron condors on Adobe or CRM or Amazon. I've got those positions. I've got verticals in here. I've got bullish ones and I've got bearish ones. So note the delta here. Some are negative, some are positive. So I've got bullish and bearish positions. I've got stuff for a class. So this is kind of also just some other positions. I've got covered calls in here. I've got selling puts. I've got short positions. I've got long investment instruments and stuff that's also not allocated. So that's really much more trading. If you're looking at a single individual position, like one-off, it's not really trading. I mean, you could say it's trading, but the problem with that is you're not really spread out in terms of your risk. And I'll tell you, a lot of these things, you don't need a ton of capital to put on some of these positions. So even though in this account, like, look, I'll do 3 contracts here, or on this position, you know, maybe 4 contracts. There's not anything that's huge or heavy. This one's gonna not getting filled yet. Here's a group on one position. I mean, how much capital did I really put in on here? So I'm not saying you got to have a lot of money or capital, but just to show you this Groupon, it might be right here, and here's this position. So when you really look at it, this position is a vertical, which is looking like it's going to expire here soon, and a profitable position for that matter. I risked $20 to make over here 30, and it's in favor. The stock went up. Just take a look right here. I went in, it dipped down, and it's moved up. And that's it, $30 on that trade. And it's fine. It's not a lot of money, relatively speaking. And again, also paper account. But the point is that you're spreading money and capital. It doesn't require a lot of money to spread your money. And that's really what trading is you're having dynamic positions in different spots. Now, you might not know iron condors yet. You might not know verticals yet. But I want to show you what real trading looks like so you can kind of get more of an idea. Now, I will say there are some things missing from this concept. And one of the big things that's also missing is good till cancel orders that I don't do on my accounts where I teach and coach people, because where I go in and do some teaching, coaching, I need to have some positions there to discuss and talk about. So one of the things that you may want to add in is, like, let's say we put on this Lulu position. I put this one on not too long ago, just today actually. So when we do like a position like this, as it starts to move down and move and work in my favor, what I want to do is also create a closing order. And I'm going to go in and see what I paid for this. So on the filled orders, Lulu was paid $5.15. So if I can go and start closing some of these trades, I'm going to do an analyze one of these. So the most I can make on this position is $14.50, roughly $14.50. So that will mean, let's say I try to close it somewhere around one contract here, and then I'll do another analyze trade, and I'll bump this one up to about $8, and I'll do another one for maybe $9. So in a live account, you might do something along these lines where you're trying to collect $900 instead of the full $1,400. But now what I'll do is send these orders in, and I'll put them in as a GTC order. And then that'll be in my, I think it's under verticals area. Could be wrong, but it won't matter. And we'll go and edit, go to GTC, put it under verticals, and then one more. And this is kind of what you'll want to do in more of a live account situation, where you also have the closing order right there in there. So that way, you know, hey, this trade, I've got the trade going in here, and I've also got orders to sell that position as well. So that way you're taking profits as it hits, and you'll want to see those positions everywhere down the row, okay? And that would be much more so of a live situation. So that's one thing that this is missing. But beyond that, you want to make sure you're mixing things up to be able to cater to the different situations, positions, as things move sideways, as things move up, move down. You've got a whole dynamic portfolio. Now, if you've got a smaller portfolio, just do one contract or do 1 or 2 shares, but spread your money. As you start evolving, you might do a little more contracts, more sizes all over the place. But this is much more dynamic, more involved, better risk management, better position sizing, and it'll help you stay more at peace. Anyways, thanks for joining me. Truly appreciate it. Check out tradersfly.com to continue to learn and evolve more about your trading, options, weeklies, SPX, 0 days. And if you visit the website, there's a lot of great freebies, courses, and even one-on-one sessions that I work with. All right, thanks. I'll see you next time.